Hi everyone, I'm Natasha, the CEO and co-founder of Cable, and I'm here today with Sumeet Abichandani from Mercury. Thank you so much for joining me, Sumeet. I'm really excited to get to chat with you today.
Hey Tosh, nice to see you too. Also equally excited to chat with you.
We know each other because Mercury is a cable customer, but I had the extra special privilege of being sat next to you not once but twice for dinners at Money 2020 last October, where we got to talk about compliance and financial crime and fintechs and banks. And it was very refreshing, and I guess I'll say somewhat unusual to meet a fintech compliance officer who has got that banking experience, but really understands what they're coming into at a fintech, knows what they want to get done, has a plan, and has the skills, the experience, and the willingness, I suppose, to get it done at a fintech as well. So I think we're going to get into some fun stuff today.
I,
To kick
I,
us
I
off,
mean,
go for it.
keep going.
To kick us off, I would love for you to spend just a couple of minutes summarizing your journey in compliance from where you started at CIT to where you are now at Mercury.
Sure. So I actually started my career a little bit before CIT doing some investigation look back contract work. And actually, when I first started at CIT, I was also a sanctions screening analyst on a pretty large look back to satisfy a consent order. Um, as I sunk my teeth into the work that needed to be done at CIT, I got really curious about the program build elements that were happening around me to for that consent order. And I kind of realized that with those regulatory trade wins, there was the opportunity to actually solve some pretty unique challenges. CIT as a banking organization was one which was trying to start an online bank from being a commercial lending institution. So I got the ability to think outside the box there. Took some of those learnings, moved on to G Capital, and like kind of rinse and repeated there as well. Um, and as I continued to grow, I continued to look for emerging risk areas in the financial services space, which of course naturally led me to fintech, where today I'm looking at probably some of the more complex emerging risk areas as it relates to banking, banking as a service, sponsor banks, and how they're navigating the regulatory environment. It's pretty unique to banking overall because typically you don't have a lot of layered relationships. Where here, your sponsor banks are placing some degree of reliance on the fintech, but then also still need to understand the the fintech's controls, the fintech's programs, and be able to speak to it to their direct regulators.
Yeah. And so that move from the more traditional banking to fintech was really you trying to find emerging interesting risks and compliance challenges to sort of flex your muscle in.
Yep, exactly that. And I think like Mercury is a little bit special to me because it wasn't just about the unique risks and challenges. I think it was also a lot about the people. So as I was looking at Mercury, I got really interested in the types of people who were operating in a fintech and how different they were from the banking space. Through the interview process, I got the ability to meet with Ahmad a couple of times, meet with Robert Gonzalez, who's our GC, a few times, and I recognized that they were some of the most interesting, creative individuals, and I'll also add intelligent individuals. Um, and I got really excited to learn from them, but then also grow alongside them as a part of my career journey.
Yeah. I've met both Imad and Rob, and I couldn't agree more. Really great team there. How is Mercury different from, I mean, you were at Capital One before, which was, I guess, one of like the OG fintechs. How is Mercury different from a traditional financial institution?
We're different in a lot of ways. I'll start with the the root of it, right? We're a fintech. We're a very tech forward organization. We're very focused and customer focused, which I think is really important. At an organization the size and scale of Capital One, um, you tend to lose a little bit of the special sauce, if you will. that makes a fintech, which is the speed at which you operate, the tech forward thinking, the ability to innovate quickly to solve problems. In a more traditional bank, what you'll find is things move a lot slower. You're able to impact change, but that change that comes through will take a year, where here at Mercury, it could take potentially like 3 weeks.
And what does that mean specifically for you in your role as a BSA officer? Does that just mean that, it's quicker to change a procedure, or it's quicker to find some data to back up your point? How does it impact your job day to day?
Sure. So data is really important. And I think data at the core of any fintech or financial institution is arguably the most important thing for a BSA officer. The availability of data, the consistency in data as well. And then the ability to, from a product perspective, build product around the data that you have to better serve our customers' needs, but then also better serve our monitoring needs. So Mercury has a series of onboarding applications, both internal facing as well as external facing, that try to make the customer's life as easy as possible. On the back end, it also makes our investigators' lives as easy as possible because we put everything in one place. On the monitoring side of the house as well, what we have is all of the transaction data running through a series of pretty complex rules and models to ensure that we're complying with the USA Patriot Act and the Bank Secrecy Act as our partner banks would expect us to. And because we have all of that data, we're not sitting on 150 legacy systems that we have to piece data together. Everything's just in one centralized place. Makes life a lot easier and faster. Then, of course, the rolling out of policy is easier. The monitoring of the effectiveness of our controls becomes easier. That's how we use cable as well, is to monitor the effectiveness of our controls. Everything just kind of like becomes a little bit easier. The documentation part of it, I think, is where it becomes a little bit more complicated, right? Because we're so tech focused that I'm usually the compliance officer that comes in and says, hey, we have to write this down. And we'll talk a little bit about documentation a little bit later too.
Yeah, I remember that challenge at Monzo clearly. We were building transaction monitoring in house, a mixture of rules based and machine laundering, a mixture of rules based and machine learning models to help us do that, and trying to sit in front of the FCA in the UK and explain to them clearly exactly how these models worked was an interesting and unique challenge. I understood from what you just said that you also build TM in house. Is that right?
That's right.
And so one of the benefits that we certainly found at Monzo was that just gives you the ability to fight fraud specifically much, much more quickly. And I remember this one Monday morning that we all came in, and we had some pay at pump fraud in the UK with Monzo. And they had these criminals had been filling up what we thought were just altered lorries, basically pouring petrol straight into the back of these lorries. And because of how pay at pump works in the UK, you were charging your card for £1, and you could fill up £100 worth of petrol. And so you only had to have £10 to fill up 100 times that amount's worth of petrol. And so we came in on the Monday morning, we saw these huge fraud losses, and we were able to put a rule in place within 10 minutes of sitting down at our desks that stopped this from ever being possible again. And I'm just wondering if you have any interesting typologies that you're able to talk about that you've seen recently at Mercury, which you were able to tackle really quickly because of your in-house built TM system.
So I'm not going to give away the magic that's behind the scenes, because, as you know, if we publicly release our monitoring rules, it gives people the ability to try and circumvent them. But I will say that there have been a few instances where we've seen common typologies between either fraudulent transactions or potentially unusual suspicious transactions, where our data scientists and our risk strategy team have banded together, identified what those common typologies were, and put in place monitoring and mechanisms to prevent either those customers from even potentially onboarding to Mercury, or being able to identify on the back end whether or not we're doing business with a potential known bad counterparty or doing business with a potential fraud ring or a P2P ring. So very similar to your experience. We definitely have had those experiences. We've definitely put in the right measures. As you know, criminals are trying to always circumvent our controls. So the more we're able to nip in the butt, the faster we can do it, the better it is for us. And to be able to release a rule from ideation to like in production over the course of a week and a half is really impressive and not something that you see in larger financial institutions as well.
Yeah, absolutely. And I presume that's one of the main reasons that you chose to build transaction monitoring in-house rather than buy. I'm interested in that conversation more deeply in general. How do you
Sure.
at Mercury decide when to build versus when to buy?
Sure. So I think it's pretty obvious that Mercury has some of the brightest tech minds, at least that I've ever encountered. So naturally, our solutions are always going to be tech forward as opposed to human capital or manual driven exercises. And when it comes to the build and buy decisions, there's a few things that we think about, right? Is what's the complexity of the project at hand and what's the time to build it versus to implement it? Because of course, if we buy it, we'll have some implementation path. What's the impact of that tooling? If we buy it, do we have a trusted tool that's reliable, passes muster right out of the gate without a significant investment in that tool? And we can make it work for Mercury pretty readily. And then the last is like, what's the value? And I think of value through a people perspective. So it's value to our internal folks who are going to be using that tool, but then also value to our external customers. Do they have a better customer experience as a result of a tool that we purchased? Do we need to have a stopgap in place, right? Where our people are frustrated because they don't have the right tooling in place, and we need to be able to support them in the best way possible. We buy it today, maybe 5 years from now, we build it in the future, right? Like there's a number of things that get taken into consideration in the build or buy. I think the big thing is what makes the most sense for the company at that very point in time is probably the biggest question you need to answer.
Yeah. And I think that's particularly interesting in the context of AI right now, where there are so many new companies starting up using AI or claiming that they can use AI to massively reduce the number of alerts you've got to review or summarize investigations or SARs for you, or in your case, UARs, of course. How do you think about where AI can actually provide you with a ton of value in the compliance space? And have you taken any steps towards using those new types of technologies that you're able to tell us about?
Sure. So I'm going to start by telling the story of big data. AI feels like the buzzword of the 1990s, like of the big data buzzword of the 1990s, where for today, AI is the new big data. And what that means for us is we're going to get to a place where AI is going to be able to streamline a lot of more of like those manual mundane processes that we see within compliance and fraud risk mitigation. Um, but that doesn't mean that we're going to be able to completely wipe humans out of the process entirely. We'll still have to be able to have lean on humans to be able to make those more difficult decisions. My favorite story is like I had an investigator once at a bank come to me and say, I just started peeling the onion back because something just felt off about this particular account. And as they continued to peel the onion back, what they found was there was a drug cartel sitting behind a series of shell companies that had applied for financing for building a bridge. And that drug cartel did not want to actually build a bridge. So I think for lack of a better way of putting it, the vibe check that you get from a person in a more complex case or scenario is not something that you're ever going to be able to remove from the compliance and risk management practices overall. But can we use AI to reduce noise and false positives in alerting? Can we use AI to make more structured decisions at onboarding? Absolutely. And I think Mercury for sure is on the path to get there. There's a number of other companies that are on the path to get there as well. But AI is not quite there specifically in terms of like replacing an entire compliance team.
And that's something that I find to be a really interesting conversation with some of the founders of these companies, because the regulation requires human eyes on investigations, on SARs, on sanctions reviews, and so on. And so, yes, there is a ton of efficiency gains to be made in generally first line of defense work. But this is not a place that we can get to a point of completely removing humans, as you say.
Yeah.
Yeah.
It, go ahead.
Go for it.
I think the one thing to remember is as AI gets smarter, though, you're going to find yourself in a place where AI can have more use cases and more complex use cases where it's not going to just replace the mundane tasks and that's it. RPA was the precursor to AI in my mind, right? So that was teach a robot to pick up a piece of data from one place and put it in another. We've far surpassed the days of RPA. We're now moving into the world of a little bit more complex decision making. And as time goes on, you'll see a better advancement in these spaces. But again, like you said, it's not going to be a world in which humans are completely removed from the process.
What is the most outlandish idea that you can come up with now, putting you on the spot for what AI could be used for in the compliance space?
Oh my goodness. I actually think filing SARs specifically, or making enhanced due diligence decisions of like account closure recommendations, or like how a company might particularly be operating, because AI is still in the place of making pretty binary decisions. And you're when you get to more complex decisions, that gives me a lot of bit of pause, because there's a high degree of error rate, either on the false positive side or even on the potential like over filing side, if you will.
Mm-hmm. Yeah, interesting. So turning to a slightly different direction now, I want to talk a little bit about the regulatory landscape and what happened with banks and fintechs last year and where that might go. So last year, 2024, was obviously a bit of a whirlwind for fintechs and also for banks working with fintechs. A huge number of consent orders, lots and lots of pressure on banks. If there weren't consent orders, there were usually MRAs and lots of conversations going on. We know banks that had the regulators in 2 to 3 times last year. This also led to less funding for fintechs. So just a crazy environment for banks and fintechs in general. What's your take on how we actually got there? What caused 2024 to be the year that banks, partner banks specifically, and fintechs just saw so much scrutiny?
The, I think the regulatory scrutiny that we're seeing today is a response to a rapidly growing financial ecosystem where innovation has outpaced the regulatory framework, which the framework from a regulator's perspective was clearly defined much well in advance of the rise of fintechs. Fintechs like Mercury sprung into place and introduced popular products that made financial services more accessible, but then also more efficient through partnerships that were pretty novel with regulated sponsor banks. But those partnerships also had exposed gaps in the existing regulations. Part of the issue lies in the mismatch between the old rules and the new realities of today, and the new realities of how tech forward financial services are becoming. The regulations that were designed to ensure the financial system's resilience, reliability, and equity were not built to address the unique dynamics of fintech bank partnerships. And that's created some uncertainty with regulators who are now trying to catch up through enforcement actions rather than being proactive with guidance. We saw something similar in the crypto space several years ago as well. For Mercury, it's how do we navigate that well? And what we needed to do was partner and adapt to bolster our compliance and risk management programs. And ultimately, we believe the scrutiny is going to be a good thing and help our industry emerge stronger than ever before.
Yeah. It sounds like you might be in favor of a fintech license of sorts. How do you think about that and its impact on Mercury?
Sure. So Mercury is actually one of the founding members of CFIS, which is a little bit more of a self-regulatory agency of sorts, or a little bit more of like the starting point to a self-regulatory agency, where fintechs have the ability to assess themselves against certain standards that were created by like referencing the FFIEC manual for BSA AML compliance perspective, understanding what the broad banking regulation is and applying it to fintechs from a product specific perspective. I am in favor of a fintech license of sorts, or more regulation, or even just more direct interaction with the regulators, whether it be with the sponsor banks or a different regulatory agency. I think there's a fine balance to walk there, where whoever does show up to provide oversight over fintechs needs to understand that fintechs are not a bank, and we do operate in a different structure, from the like three lines of defense being a little bit different than what you would see at a traditional brick and mortar institution, to the way we ship product, the way we govern the product that we ship, etc., has a different operating rhythm than what you would see in traditional financial services.
That last point is really interesting. One of the biggest challenges that we had at Monzo when we became a regulated bank was the ability to ship product. We suddenly had to go through formal board committees to ship new products, and that slowed down the innovation and the speed of product delivery at the bank. From a sort of, I guess, halfway inside outside view of Mercury, given how closely we work together, it does seem to me like Mercury has a pretty bank-like first and second line structure. And so I'm interested in if you agree with that, firstly, and then I suppose whether perhaps Mercury is just a bit more mature in its approach to the first and second line than other fintechs that you know of.
I'd say we're probably more mature on the scale of, we have the operations in place and we're doing the things that are expected of us, because we've also been developing the CFIS standards for ourselves, as well as for others that become members of CFIS in the future. So on a maturity scale, I think we're probably a little bit further along than some other fintechs. I still come across fintechs where they're a compliance department of one or two. And what we've learned over the course of the past several years is that's probably not the most effective way to manage compliance. It brings me back to the old days of, in the commercial banking space, there's an adage that compliance was one tenth of one lawyer's time, and we all know that not to be true today. Those organizations now have armies of compliance folks, and I think as fintechs continue to get more regulatory scrutiny, more focus and attention on them, because they're growing as quickly as they are, you're going to start to see a larger investment in compliance, a larger investment in organizations like CFIS, to make sure that the fintech can actually have long-term sustainability and stickiness in the marketplace, but then also stands up to the requirements that the United States and then also globally financial institutions or financial services companies are held to more broadly.
Mm-hmm. If you could give, one or two pieces of advice to a new fintech founder or the first BSA or compliance hire at a new fintech, what would they be?
There's probably two things. One is, make sure you understand your risk. Understanding your risk is probably the most important thing, and for me, it comes in the form of BSA AML and sanctions risk assessment, which, as you know, I'm a little bit of a nerd for, and that risk assessment shouldn't just scrape the surface. It should actually give you a really good profiling of your inherent risks, what your customer base looks like, the geographies within which you operate, the products and services that you offer, and then like be a pretty independent view of your control environment to determine your residual risk. It's going to help you make business decisions overall. And then the second is don't be afraid to innovate. I think oftentimes what happens in the compliance space is folks always lean back towards what did the bank do and how did the bank accomplish this thing. There's always an opportunity to be a disruptor. I think having a defensible and well-documented argument as to why the tech forward or the disrupted process or practice is better is what is really important in the environment that we're in today, but then also for the long term. But just rinse and repeating something that somebody else did doesn't necessarily make for the best possible solution within either a fintech or even within a bank for that matter.
Yeah, good tips. Really taking your risk assessment seriously and using it to drive business decisions and not being afraid to innovate. I couldn't agree more. They're two fundamental things that I think on the first, compliance officers often just take that process a little bit for granted. Something that you have to do every year. Let's just copy the risk assessment from last year, maybe add in a new control and go from there. Yeah. And taking a different, more nuanced, more detailed approach is definitely going to set you off well. Yeah. I think you're on the board of the Coalition Against Financial Crime, aren't you? What is that? Tell us a little bit about it.
Sure. So the Coalition Against Financial Crime I call it the startup of AML productions, if you will. So you've got larger organizations like ACAMS, the Association Against, the ACFCS. Oh my goodness, I cannot remember the name of it. We're going to have to repeat this question, by the way.
The Association of Certified Anti-Money Laundering Specialists is ACAMS. Yes. That's
and then ACFCS was the other one that I did not have. And that is
Association of Certified Financial Crime Specialists.
Financial Crime Specialists. Yep. There we go.
Let's ask that question again.
Yeah, sorry about that.
All good. So I think you're on the board of the Coalition Against Financial Crime. Tell us a little bit about it. What is that?
Sure. I consider CAFC the startup of AML and anti-financial crime event production. And it's very much so an organization which allows itself to serve a marketplace or serve an audience that doesn't necessarily get covered by ACAMS or ACFCS, which tend to cater themselves to much larger financial institutions. What our primary focus is bringing people together who share either in fintech challenges, sponsor bank challenges, or in the middle market banking range challenges, where we're seeing a lot of consent orders drop. There's a few things that CAFC does well, which is we focus very heavy on building a community and building a network of individuals who are in the financial crimes compliance space, who are facing similar challenges as it relates to all of the regulatory actions that we talked about previously. In addition to that, we also like to really focus on bringing diversity into the speakers and elevating folks who you might not normally see at a large ACAMS or Money 2010-20 event. So what you'll find is you'll see much more diverse panels, much different focus in terms of the types of discussions we have. And then we also make it a point and are very intentional about creating a very safe space for networking during each of the conferences that we run. As a board member, I love it because as somebody who has struggled to grow over the course of my career, it gives folks who actually want the ability to grow visibility into what their skills and truthfully their intelligence looks like. But then also it gives us the ability to create a network of BSA officers, sanctions compliance officers, and fraud specialists who can start to share information with one another, or even just ask the question of, hey, I ran into this one thing. How do you solve it? So we're building a community, we're building events, and we're also trying to make it so then that way it's as approachable as possible.
Awesome. I wasn't able to make it to Miami, but hope to be at the next one. It sounded like a
We
very good event.
our next event is going to be in Chicago. It's actually a women speakers only event. So in honor of Women's History Month, we'll be doing a all women speakers, mixed audience, but all women speakers to highlight all of the great women in the anti-financial crimes industry.
Well, I look forward to my invitation to speak then.
We will reach out. We will.
What's the one lesson you've learned from your time at Mercury that you think every BSA AML officer in fintech should hear?
Know your risk. Know your risk profile. Make sure that you're making decisions based off of the risk associated with the organization, and make sure that your solutions are right sized to that risk profile and that organization. I think that's probably the biggest thing any BSA officer needs to hear is start with the risk and then come up with the solution, as opposed to the solution to a problem that you might not necessarily fully understand.
Yeah, brilliant. All right, well, just a couple of more personal questions to wrap us up, Sumeet. I want to know what you read to keep up to date with compliance.
Everything. So I'll start with, I read every consent order that ever drops. And the reason why I read every single one of those consent orders, while the words on paper might seem similar, there's nuance in how the regulators are treating different financial institutions. And I think it's really important to pick up on the nuance. The Wall Street Journal and the New York Times, they both have compliance segments in them. So I pay very close attention to that. And then, of course, any rulemaking that comes out, whether it's proposed or final from any of the prudential regulators or from FinCEN, I pay very close attention to. In addition to that, there are a number of blogs. So CAFC has a blog that we publish newsletters to. Moneylaundering.com does as well. So I pay close attention to like the industry news as well.
Awesome. Thank you. How can people find the CAFC blog? CAFC.com?
CAFC.org.
.org. Perfect. And then finally, what do you do when you're not fighting crime?
When I'm not, I don't think there's ever a point in time when I'm not actually fighting crime. But between Mercury and CAFC, I will say a lot of my free time gets invested into those areas. When I'm not focused on CAFC or Mercury and CFC, I'll go to a movie, a Broadway show. I love going to museums around New York City, and experiencing the arts and getting myself out of the mundane or monotonous day of putting together documentation and fighting financial crime.
Yeah, brilliant. Well, thank you so much for joining me, Sumeet, and chatting with me. I think that there's a lot in here that people will learn from, so I really appreciate it. Thank you so much.
Thanks so much for having me.